Okay, let's just get right to it. It's the question that's on every crypto investor's mind in early 2026. After a really brutal drop, is this it? Is this the start of another long, dark crypto winter? We're going to break down both sides of the argument, point by point, and try to figure it out. First, I want you to think back with me to October 2025. The market was absolutely on fire. Bitcoin had just blown past its old highs, hitting a jaw-dropping $126,000. I mean, the euphoria was just everywhere. And then, boom, this happened. By early February 2026, the price had just fallen off a cliff, hitting a low around 62,000 bucks. A pretty shocking reversal that vaporized months of gains, seemingly overnight. So, yeah, that brings us right back to the big question. A drop of nearly 50% from the all-time high is a huge move, no matter how you slice it. So does this mean the party's over? Are we officially in a bear market? Let's dig in. All right, let's start with the yes argument. This is the case that says, hey, look around. This looks like a bear, it smells like a bear, it's probably a bear. It's the classic textbook view. Okay, so first things first, what even is a bear market? If you borrow the definition from the stock market, it's pretty simple. It's just a drop of 20% or more from the recent highs. It's a clear, straightforward benchmark. And, well, there you have it. If we use that classic definition, there's not much to debate, is there? A 45 to 50% drop means Bitcoin isn't just in bear territory, it's deep in it. Case closed, right? Not so fast. See, here's where it gets interesting. In crypto, the term bear market means something way more brutal. We're not talking 20 or 30%. Historically, Bitcoin's bear markets have been these catastrophic, soul-crushing drawdowns of 75, even 85%. That history sets a completely different standard for what a real crypto winter feels like. And if that wasn't enough to make you nervous, the bears will point to this scary-sounding thing called the death cross. For people who live and breathe charts, this is a huge red flag, a classic warning sign that a major downtrend could just be getting started. And here's the real kicker. Bitcoin actually printed a death cross back in November 2025. The last time we saw this signal appear right after a market peak was in 2022, and what followed was a devastating 66% plunge. That's a statistic that's got to send a shiver down your spine, no matter how bullish you are. Okay, so that's the scary part, but that is only one side of the coin. Now let's flip it over and look at the counter-argument. And it's a really compelling one, that the old rules just don't apply anymore, and comparing to data past cycles is a big mistake. This is really the heart of the "this time is different" argument. Past crypto winters were fueled by retail investors panicking and these catastrophic blowups from shady, unregulated companies. But today, the market is propped up by big money institutional ETFs, and the whole structure is just way more robust and regulated. The actual DNA of the market has fundamentally changed. And if you want to see that new force in action, just look at this number. Over $57 billion. That's how much has poured into the new spot Bitcoin ETFs. This is a massive, permanent wall of demand from institutions, a kind of structural support that just flat out did not exist in any previous cycle. One market strategist, Gareth Soloway, put it really well. He basically said that because of this new institutional layer, the days of those epic 75% crashes might be over. Instead, we'll see shallower corrections where the big money just steps in and buys the dip. And it's not just gut feelings either. The on-chain data is telling a similar story. There's a metric called the Mayer multiple. All it does is compare the current price to its long-term average. And right now, it's at 0.6. So why does that matter? Well, historically, whenever it gets this low, it is signal that the market is massively oversold. In fact, it's pretty much pinpointed the major bottoms in 2018, 2020, and 2022. So what do you do with that? We've got two powerful, totally conflicting stories. One side is screaming classic bear market. The other is saying the whole game has changed. What if the real answer is somewhere in between? Well, this is the idea that a lot of analysts are starting to settle on. What if it's both? What if we're in a market that, technically fits the definition of a bear, but it's not acting like the bears of the past because of these powerful new structural forces, like all that institutional cash? So maybe we need a new name for what's happening. Analysts are starting to throw around this term, a mid-cycle, structurally contained bear. The idea is that it's not the end of the world crypto winter we've seen before, but something different, something more contained
and maybe even a little more mature.
And you can actually see this trend playing out over the very long term. As Bitcoin has gotten bigger and the market has matured, the intensity of these bear markets has actually gotten less and less severe with each cycle. The lows keep getting higher, which suggests this long-term trend of volatility slowly coming down.
Which leads to this pretty wild conclusion. Instead of this being a sign that everything is about to collapse, some are saying this is actually the weakest bear case in Bitcoin's history. They see it as a sign of strength, that the market can now take a punch without getting totally knocked out.
All right. So if this is a new kind of market, what should we be watching? What are the key signals that are going to tell us if this is just a healthy correction or the start of something much, much worse?
Well, the pros are keeping their eyes on 5 key things. Number 1, ETF flows. Does that big institutional money start buying again? 2, leverage. Have we gotten rid of enough of the risky bets? They're also watching how closely Bitcoin follows the stock market, whether big companies keep buying the dip, and finally, overall market liquidity. Can the system stay stable under pressure? These are kind of the new vital signs for the market's health.
But, at the end of the day, price is what matters. And right now, there is a very clear line in the sand on the charts. That support zone between $60,000 and $65,000 is absolutely critical. If that level breaks for real, it could open the floodgates to a much deeper, much more painful sell-off.
So really, it all boils down to this. The bull case says this is just a contained, mid-cycle correction in a market that's finally growing up. The bear case says, don't be fooled, this is just history repeating itself, and the real pain, another 70+% drop, hasn't even started yet.
So I'll leave you with this final question to think about. Are we just witnessing the growing pains of a market that's finally maturing, learning how to correct itself without completely collapsing? Or is everything we've seen so far just act one of a brutal crypto winter that's going to be just as bad as all the ones that came before?